big day for the banks, but they've had quite, I'm not going to sort of stretch it out and say there's a renaissance, but there has been a lift. If I look at some of the price-to-book values, Deutsche Bank down at the bottom, 0.29. But then I look at the other side and I've got HSBC up at 0.79%. How does the world of banks look to you?
Well, the banks have staged a pretty strong recovery from their weakest points a few months ago. As a reminder, those very low levels were around concerns about Deutsche Bank, concerns about the Italian banks, Monte Paschi in particular. So some of the recovery has just been a lessening of fears about things like bail-ins or sort of extraordinary capital injections into those banks. A couple of other factors have played a role. U.S. banks reported stellar earnings for the third quarter. A lot of that was driven by FICC, that is, by fixed income trading, which itself may have been a result of somewhat greater volatility in those markets, which they profited from. But there are big differences between the U.S. earnings and the earnings potential in Europe. And in particular, the consumer and housing in the U.S. are greater sources of earnings for U.S. banks than you'll see in the corresponding numbers in Europe.
And there was a lovely line, I read a really nice line on JP Morgan, which was diversification. What Jamie Dimon has done is, of course, he has a much more diversified model, perhaps than some of his peers. Jess Staley, there's three legs to his stool, and banking is one of them. You mentioned fixed income, commodities and currency, which you're very gracious. You sort of take me nicely to what I prepped for us. BTV 4515. This shows the FICC for DB, UBS, and Barclays. Obviously, Deutsche Bank reports annually, hence the reason why they're not there. But this could be a land grab situation. The other thing that came to my mind was, and you'll probably say, man, it's extraneous events always drive bond trading, don't you remember? But this quarter has been quite a precipitous quarter for FX trading at UBS, for fixed income trading. I just wonder, are these models still, built for business, really?
Well, in the third quarter itself, of course, saw a pretty interesting turn in fixed income markets. We initially started out with the progression of lower bond yields, which were shoved lower in part because of Brexit. But in August, we began to see that turn, and we saw higher yields ensue. That's, of course, says a mixed story for banks. Bear markets in bonds are probably not necessarily a good thing for a trading desk. On the other hand, net interest margin does improve as we see a steepening of yield curves, and that's been a big part of the story as well behind bank share prices over the course of the last couple of months, as they have been helped to the extent that folks are counting on that underlying business model being helped by a bigger spread between long rates and short rates.
Yeah, and we're certainly going to carry that conversation forward with Staley and with her Motti tomorrow, and you and I are going to talk bonds a little bit later on. The overnight story here on banks is that, and this is our trade minister in the United Kingdom, Mr. Mark Garnier, saying the UK weighs a new model for the single market. If we can create a hybrid of what we have at the moment, potentially saying that passporting is something that's definitely going to be off the table. Banks likely to lose passporting, will get a new model. Is that pretty much as you think it's going to be, yourself and Alex, when you sit down and you chat about this?
Well, the overall framework is clearly one where everything has to be on the table up for negotiation. You leave a club and you have to rewrite basically all the rules, and that's the cold reality that Britain is waking up to, and the various sectors that operate extensively throughout Europe. For financials, yes, there's going to have to be some thoughts about what replaces the current passporting system. There may still be access, but it will come at some cost, and some cost in political terms as well, if the UK wants to have the same passporting arrangements that it hitherto has enjoyed.